Canada and Mexico seem to have joined forces against the United States on trade, and insiders say the future of NAFTA, or rather USMCA, hangs in the balance. Leaders in Ottawa and Mexico City accuse Washington of breaking key promises, imposing unfair tariffs, and ignoring dispute rulings. It's an unexpected twist, considering that these three neighbors once boasted about tight economic bonds. How did things turn so sour? And what might this mean for companies and consumers across North America? Some see it as political theater, while others warn it could open the door to an all-out trade war. A quick history of NAFTA, now USMCA. The original North American Free Trade Agreement, NAFTA, came into effect in 1994, linking Canada, the United States, and Mexico in a landmark deal that aimed to reduce tariffs and boost cross-border commerce. By the late 2010s, critics argued it needed an update, leading to a renegotiation under the Trump administration. That brought forth the United States-Mexico-Canada Agreement, USMCA, which took effect in mid-2020. Under USMCA, certain rules changed. Car manufacturing faced higher regional content requirements, dairy market adjustments were made for Canada, and labor standards were revised for Mexico. At the signing, each country claimed victory, promising robust regional trade. Yet less than 4 years in, tensions have flared. Canada and Mexico accuse the U.S. of cherry-picking the treaty's benefits while violating or sidestepping other commitments. Why Canada and Mexico are teaming up? In recent months, both nations have grown increasingly frustrated with U.S. actions. One major point is how the U.S. interprets rules of origin for the auto industry. Canada and Mexico argue that Washington's strict reading forces them to source more components from within the U.S. or face tariffs, undermining the spirit of integrated supply chains. Another sore point is agriculture. Mexico, known for produce exports to the U.S., complains about new pesticide regulations and potential seasonal import restrictions. Canada, meanwhile, points to lingering U.S. tariffs on softwood lumber and aluminum, which Ottawa sees as unfair. A joint statement from Canadian and Mexican trade officials released in August 2023 hinted at coordinated measures if the U.S. fails to address these concerns. Fact-checkers confirm that both governments have hosted high-level meetings, some in Mexico City, others in Ottawa, where they shared data on lost sales, stalled investments, and missed market opportunities due to perceived U.S. non-compliance. For instance, Canada's forestry sector estimates a $1.5 billion hit from ongoing lumber tariffs. Mexico's avocado exporters say tighter border checks raise costs by millions each year. The shock to U.S. businesses? Surprisingly, some American companies side with Canada and Mexico, urging Washington to ease trade barriers. Car manufacturers that rely on seamless cross-border component flow fear that stricter rules of origin might raise production costs, pushing them to relocate some operations outside North America entirely. Meanwhile, U.S. food distributors that import produce from Mexico complain about potential supply shortages and higher prices if tensions escalate. A bar chart from the U.S. Chamber of Commerce shows cross-border trade with Canada and Mexico soared from $1.1 trillion in 2010 to $1.5 trillion in 2022. If these flows slow or face new tariffs, consumer goods could become more expensive. Companies also warn about job losses in assembly plants and distribution centers near the borders. It's an odd scenario. American businesses pressuring their own government to listen to Ottawa and Mexico City's grievances. Recent data illustrating the rift automotive exports. According to the Mexican Automotive Industry Association, vehicle exports to the U.S. dipped by 7% in the first half of 2023, partially attributed to supply chain disruptions and new documentation requirements. Softwood lumber, Canada's exports to the U.S. in 2022, were around $6.5 billion, down from $7.3 billion 2 years prior, as multiple rounds of U.S. duties chipped away at profitability. Agricultural produce, Mexico's exports of fresh fruits to the U.S. dropped 4% year-on-year as of July 2023, with some producers citing more border inspections and potential new tariffs on produce. While these declines aren't catastrophic yet, trade officials say they reflect a broader trend. Each dispute on its own might be manageable, but the combined impact is fueling resentment and talk of teaming up to push the U.S. into concessions. How the U.S. reacted, or didn't American officials publicly downplay the conflict, calling it a normal negotiation process? Behind closed doors, though, sources say the White House is uneasy about the prospect of a coordinated challenge under USMCA's dispute mechanisms. Under these rules, if Canada and Mexico unite in a complaint, they hold stronger bargaining power. The U.S. can't easily dismiss concerns as an isolated issue. Some in Congress, however, view the alliance as a threat. A few lawmakers propose doubling down, slapping more duties on Canadian goods, or intensifying border checks on Mexican produce. They argue that the U.S. must protect its industries from subsidized foreign competition. Others warn that pushing allies too far risks fracturing the USMCA altogether. The tension is palpable, as no politician wants to appear weak on trade, yet many fear the chaos of a full-blown spat with America's two biggest trading partners. Electric vehicles as a flashpoint. Electric vehicles, EVs, add another layer of complexity. The U.S. government, through legislation like the Inflation Reduction Act, offers incentives for EVs built mainly with North American parts. That means Canada, Mexico, and the U.S. all aim to attract battery factories and related supply chains. But if origin rules or cross-border disputes block EV components from moving freely, it hurts everyone. Canada invests heavily in battery metal production, nickel, cobalt, hoping to feed auto plants in Michigan and Ohio. Mexico, famous for affordable labor, wants more final assembly lines for EVs. The U.S. sees a domestic EV boom, but needs stable supply chains from both neighbors. Now, if Canada and Mexico link arms against Washington's interpretation of USMCA rules, EV projects could stall. A line graph from the Canadian Automotive Parts Manufacturers Association suggests a 30% jump in EV-related exports from Canada in 2022, but that growth may slow if uncertainties mount. The growing role of BRICS observers note that Canada and Mexico rarely align in trade disputes. Some speculate they might even flirt with new alliances, like forging deeper ties with BRICS nations. While Canada is not an obvious fit for BRICS membership, Mexico has shown interest in diversifying trade to emerging markets. If the U.S. proves too difficult, these countries might seek alternative markets or collaborate more with China, India, or Brazil. China, in particular, invests in Latin American infrastructure and resources, offering an alternative to U.S.-centric trade. A rumor says Chinese officials met with Mexican trade reps to discuss port upgrades and possible yuan-based transactions. Meanwhile, Ottawa has historically kept close ties to Western allies, but it also looks to expand relationships in Asia. A pivot might be subtle, focusing on individual sectors like minerals or agri-tech. Still, the threat alone could pressure Washington to compromise. Could NAFTA, USMCA collapse? Is it realistic to think the entire deal might unravel? Experts say a total collapse is unlikely. Too many businesses depend on the integrated North American market. Yet, if the partnership frays enough, we might see partial pullbacks, new tariffs, and a climate of distrust. Companies could start shifting investments away from the region if regulatory clarity vanishes. A meltdown scenario goes like this. Canada and Mexico file formal dispute complaints. The U.S. retaliates with bigger tariffs. Canada and Mexico respond in kind, targeting politically sensitive U.S. sectors, like dairy in Wisconsin or corn in Iowa. Meanwhile, supply chain disruptions raise costs for automakers, electronics firms, and retailers. Consumer prices rise, fueling public anger. Politicians in each country blame the others, culminating in a standoff. Eventually, parts of USMCA could be frozen or replaced by smaller bilateral deals, undermining a quarter-century of progress. The numbers at stake cross-border trade among the three countries surpasses $1.5 trillion annually. The U.S. Chamber of Commerce estimates that 12 million U.S. jobs depend on this trade. For Canada, over 70% of its exports go to the U.S. Mexico sends about 80% of its exports north. The interdependence is huge. Breaking or damaging the arrangement could hamper growth for all three. A downturn in one economy often drags the others down. Major industries at risk include auto manufacturing, which employs hundreds of thousands in each country, agriculture, from Midwest grain to Mexican avocados and Canadian wheat, energy, Canada's oil sands supply U.S. refineries, Mexico exports crude and imports U.S. natural gas, and tech, where cross-border supply chains feed into the U.S.'s Silicon Valley and beyond. The stakes couldn't be higher. Possible solutions and obstacles. A core solution is renegotiating certain USMCA clauses. Canada wants the U.S. to accept less rigid rules of origin for autos. Mexico hopes to avoid extra farm-related tariffs and secure stable rules for produce shipping. In return, the U.S. might demand more protections for its own steel and high-tech exports. Or it might push for stricter labor standards in Mexico, something labor unions in the U.S. advocate. However, domestic politics complicate matters. The U.S. has an election cycle, and being soft on trade can be risky. Canada's political climate also sees nationalism flare over softwood lumber or dairy disputes. Mexico's leadership aims to appease powerful farming lobbies. Each side fears backlash at home if they concede too much. That gridlock is what made the USMCA negotiations so intense, and it's flaring again now. The role of energy in EV transition energy is another big piece. Canada supplies large volumes of crude oil, natural gas, and electricity to the U.S.-Mexico's state-run oil firm. Pemex invests in refineries and could pivot more exports if deals sour. On the cleaner side, all three claim they want to boost renewables and EV technology. Tensions hamper that goal because building a green infrastructure often requires cross-border investments and supply lines. If Canada imposes or threatens an oil toll, or Mexico tightens rules for natural gas pipelines, the U.S. might face higher energy prices that hits American consumers. Meanwhile, delays in EV component shipments from Mexico or battery metals from Canada hamper the U.S. push for lower emissions. The synergy that once fueled a North American energy powerhouse could fracture, letting other global players fill the gap. The human impact behind every trade statistic lie real jobs and families. A plant in Windsor, Ontario, that assembles car parts for Detroit factories may worry about layoffs if cross-border friction persists. Fruit pickers in rural Mexico fear losing guaranteed American buyers. In border states like Texas and California, thousands of small businesses trade daily with Mexico. A slowdown or meltdown spells ruin for some. Meanwhile, consumers from Chicago to Montreal might see higher grocery bills as produce or dairy costs climb. This crisis also weighs on immigration. Mexico has worked with the U.S. to curb migrant flows. If Washington remains hostile on trade, Mexico might reduce cooperation on border security. Indirectly, that could spike tensions over illegal immigration or cross-border smuggling. Similarly, Canada might reevaluate cross-border security pacts if trust diminishes. These issues, while not purely economic, are entangled in a broader web of bilateral or trilateral relationships. Signs to watch in the coming months: official complaints. If Canada and Mexico jointly file a formal USMCA dispute, that signals a big escalation. Tariff announcements: keep an eye on any new U.S. tariffs aimed at Canadian or Mexican goods. Similarly, watch for retaliation from Ottawa or Mexico City. High-level summits. A rumored meeting of North American leaders in early 2024 could be a make-or-break moment. Automotive investments. If major automakers freeze or move EV projects, it indicates deep uncertainty. Agricultural lobbying. Farmers in each country hold considerable political sway, so their reactions can shape official policy. Are we heading for a full trade war or a deal? It's tough to say. Economic logic suggests the three countries should resolve disputes. The integrated supply chain is beneficial, and a collapse harms everyone. Yet politics and nationalism can override logic, especially in heated election cycles. Canada and Mexico forging a united front could push Washington to concede on some points, like relaxing auto rules of origin or removing certain tariffs. In that scenario, a compromise emerges and USMCA stands. Alternatively, if hawkish voices dominate, the US might double down, ignoring the alliance between its neighbors. That path leads to more tariffs, more disputes, and potentially a partial unraveling of the trade pact, a downward spiral, with each side punishing the others in a cycle that's tough to stop. The final direction likely depends on negotiations in the next few months, behind closed doors, away from the public eye. Insiders whisper that Canada and Mexico have an even bigger move in store: a plan to restrict or slow certain crucial exports to the US if talks fail, potentially hitting industries that keep America's economy humming. Could this force a dramatic showdown that topples USMCA itself? The clock is ticking, and each leaked detail points to a deeper rift. The next big announcement might reveal whether North American trade stays intact or splinters under the pressure.